The economic survey basically tells us one thing very clearly. India's macro picture is strong, but the market will now focus on how this growth converts into earnings. Let me quickly break down the key takeaways. India is still the fastest growing major economy with GDP growth around 7.4% for this fiscal. This growth is largely driven by domestic consumption, which now forms more than 60% of India's GDP, along with steady investments close to 30%. So this is not a fragile economy or an export-oriented growth story. It is actually driven from within. On the fiscal side, the government continues to consolidate while banks are in their healthiest shape in decades. Bank NPAs are down to nearly 2.2% and credit growth is running around the 15% mark. This means the financial system is no longer a bottleneck, it is actually supporting growth. Inflation has been exceptionally well controlled as well, averaging just around 1.7%. Low inflation gives policymakers breathing room and helps preserve purchasing power. For markets, stable inflation usually translates into more predictable interest rates. On the agriculture side, it has surprised positively with record food grain and horticulture output. Production has crossed 350 million tons and rural digitization is improving price discovery. A stable rural economy is crucial for players like FMCG, two-wheelers and discretionary demand. Manufacturing is slowly showing signs of structural recovery. PLI schemes have already attracted over 2 lakh crore rupees in investments and created more than 12 lakh jobs. This is a long-term story. The benefits will show up gradually in earnings, not overnight. The government capex remains the backbone of this growth. Spending on roads, railways, power and logistics continues to grow in double digits. This is why capital goods, infrastructure and PSU stocks remain structurally important. Despite global uncertainty, India's external position is comfortable. Services exports are at a record high and forex reserves are above $620 billion. This reduces currency risk and gives confidence to global investors. The formal employment is steadily improving. EPFO additions are running close to 8 to 9 lakh per month, indicating continued formalization. This matters because formal jobs lead to more stable and sustainable consumption. On the technology and AI are now part of the core growth narrative. India's digital public infrastructure and startup ecosystem are scaling rapidly. This is not just about IT, it impacts banking, retail, logistics, and even agriculture. So the overall economic survey paints a strong macro picture. However, markets will now focus less on headline growth numbers and more on earnings, delivery, and execution. Macros are supportive, but in this phase, stock selection and earnings visibility will matter far more than index direction.